What's going on, everybody? It's me Jay again. Welcome back. Recently I've made my mind to make serious videos about trend and breakout for the next couple of weeks. So if you want to be part of the 5% successful traders, make sure to watch the whole content of this video and follow up the coming episodes. But before we get started, I'm very grateful to those who have been supporting my channel, because I got 1000 subscribers in just 40 days and a lot of constructive comments and thumbs up from all my followers. But if you're new here, don't forget to take a moment to smash the like button and click subscribe, plus turn on the notifications bell. So let's start with the basics. What does it mean when we say trend? Trend is the overall direction of a market, which is created when the price is making higher highs and higher lows when the market is on uptrend, and lower lows and lower highs when the market is on downtrend. Remember, when the market is on uptrend, the price will be making higher highs and higher lows. But if the market is on downtrend, the price will be making lower lows and lower highs. You have to remember that those trend lines, they can act as support and resistance. That's why we are focusing on them. So what is breakout? Breakout is a market price which is moving outside a defined support and resistance level or a trend line. If the market is moving outside a trend line, that's called a breakout. At the same time, if the market is moving outside a defined support level or resistance level, that's also called a breakout. So now, how can we use this knowledge of trend and breakout to make a profit? Step 1. Identify trending market. Just take a look at the market and identify the direction of the market. Here in this picture, the market is going up, so this is called uptrend. And on this one, the market is going downward, so this is called downtrend. Step 2. Draw a trend line connecting all the lows in uptrend. Here in this picture, the market is on uptrend. That means the market price is creating higher lows and higher lows each time. So we draw our line connecting all those low points. Then that's called a trend line. In the same manner, draw a trend line connecting all the highs for the market which is in downtrend. If the market is going downward, it will be creating lower highs. So to draw a trend line, we need to connect all those high points. Here in this picture, the market is on downtrend and the trend line connected all those high points. Step 3. Spot the breakout point when the market price breaks out of the trend line. Here on this chart, the market broke out of the trend line, so this is called a breakout. Step 4. Identify high confluence areas or rejection areas for sniper entry. In this step, we can use either support and resistance key levels from the previous market sessions. So if you have any support and resistance level from previous market session or the key levels that you have spotted before, you can use those levels now for your entry. Which means when the market comes back after the breakout to this confluence area, we can take advantage. We can take that as a sniper entry. Then finally, step 5. Follow the market by putting a trailing stop loss. Trailing stop loss means when the market moves in our direction, then we move our stop loss with the market. Let's say we sold on crash 1000. If the market is going in my direction and if I'm in profit, I should move my stop loss. That means not to be in loss again, I have to move my stop loss with the market. That is called trailing stop loss. Okay traders, now let me show you all those steps with clear illustration of boom and crash chart. This chart right here is from boom 500 on 15 minutes. Let us see what the market will do. Let me play it now. And the first step, all we need to do is spot the market which is on trend. Right now we cannot spot anything because it has been consolidating on this area, but here the market is trying to push up. That means it's trying to create uptrend. So wait for the market till it creates highs and lows. When you spot those points which are called highs and lows, then we can draw our trend line. So let's wait for the market to create lows and highs. Yeah, let me pause it. As you can see here, we have got our high point here. We have actually two highs. This one is high here. Let me show you by drawing this. This point right here, it's high, and this point right here is called high. So what do we call these two highs? They're called higher highs, because before those two highs we had high here. The market came down, created a very low point here, that's called swing low, and pushed up, created another high. So this high right here, it's higher than this point. That's why we call higher high. And again the market created another high above this point, so that's also called higher high. Then another low created here, this point. The market created a low point on this point. What does it mean? We had a low here, but the market came again and created low. So this low is above this low. That means we have higher low right now, which is a criteria for a trend. Now we can, okay, let's continue following up the market. Now the market is going up. The key point in making profit in the market is always patience. Traders, you have to remember this. If you're not patient, if you want to take every trade that you see on the market, you will definitely lose your money. Trading, it's 80% patience. I hope you know this. 80% psychology, 80% emotion. Let me pause this. As you know, the statistic tells that 95% of traders, they lose their money every day. Only 5% of traders, they make money consistently. What does it mean? What is the secret that those 5% traders are making money? Why are they making money? Do you think they're aliens? No. Do you think they are superhumans? No. They're just following their psychology. 80% is emotion, psychology, and patience. The analytics and the technical part is only 20%. If you are very good at analytics and bad at emotions, let me tell you, you cannot make money. So what we have got here, we have been waiting, right? Maybe one day, yeah, it's on January 1, as you can see here. So the whole day we have been waiting for the market to give us a comfortable place to take a trade. So what we have got here, we got three lows. This one is low right here, and another low right here, that's called higher low, and another low here, that's called higher low again. So what does it mean? By connecting those three low points, we can get a trend line, right? If you remember from those steps, first, spot the market which is on trend. We have spotted because this market is on uptrend. Step 2, draw trend line. Let us draw trend line. Yeah, try to connect those 3 points. You don't have to be 100% perfect. Just draw a trend line which tells us the market is on uptrend. So what next? Wait for breakout. If the market breaks out, that's That's the signal that a good opportunity is coming. Let's see if the market breaks out. Still going up. Still going up. Yeah, you see the market came down and again retested this trend line, the trend line that we drew from those previous lows. Again the market created another low here, that's called higher low again. So let's continue our analytics. Let's see if the market breaks our trend line. Okay, let me pause it here. Let us draw a trend line here. Sorry for this one. This will be our trend line, right? Our trend line will connect those low points. So the market is going up, went up like this, pull back, went up, pull back, again it went up and pull back. The market was going up by creating higher highs and higher lows, but right now the market was unable to create another higher high. These highs, they are equal, they are almost equal. What does it mean? At this point the market lost momentum. This is the signal that the trend is going to change. Okay, what next? Next, the market broke out here. The market broke out of the trend line. We had a trend line, right? So we got a breakout. Voila, that's a good signal to take a trade. So now let's wait what the market will do next. You don't have to take the trade as soon as you see breakout. Okay, I'll tell you the next step. Let's see what the market will do next. Pushed back. So how to enter a trade? Where is a perfect entry? Where is the sniper entry? So to spot that one, let me show you this. Let me clean this chart. Okay, follow this part attentively. We have the trend, we have the breakout. What's the next step? Next step, to take a sniper entry, try to figure out where the confluence point is. Confluence point means high pressure area where the market has been rejected and reacted many times. So I think you can easily spot these points. The market rejected here, rejected here, rejected here, again rejected, and again rejected. The market has been rejected 5 times only in this area. So we can take these areas as high confluence area. So finally, before you take a trade, try to spot that area like this. I prefer to draw rectangles because they can show me those areas where the market has been rejected. So I have this rectangle. I'm waiting for the market to break down from this rectangle. As soon as the market breaks down from this rectangle, I can put my stop loss above this rectangle right here, and I can follow the market, right? So let's see what the market will do next. You see, the market pushed down and came back again to this rectangular area. Okay, what's next? The market broke below my rectangular area, that's called high confluence area. So I'm waiting for the market to retest my confluence area. So here the market retested, it's almost inside that rectangle. So I take a sell position here, and let's see what the market will do. Yeah, the market is pushing down. As I've told you, my stop loss will be above this area, above the rectangle. Around here I'll put my stop loss. Then the trade went down, the market went down in my direction. That's very cool. This is how you trade, this is how you make money. For those who want to scalp in 1 minute, it's cool. You have to know these things. You cannot scalp 1 minute before, like without checking 15 minutes, without checking 1 hour. You need to know these points. You need to know these things. They're very crucial. So the market went down. Let's see what it will do next. As soon as we see pullbacks, we have to spot the high confluence areas, because our stop loss will be trading, right? We have to move our stop loss with the market. You see, this area right here is high confluence area, so I can draw this rectangle right here, and I'll definitely move my stop loss around this point. Sorry, I can move my stop loss around this point. So for those who came late after the breakout, we can also take a trade around here. This is also another entry point. Or if you have good amount of money, you can also add position here. Okay, let's see what the market will do next. Still pushing down, again retesting, pushing down. Okay, another point, you have to let the market play. Okay, if you want more profit, if you want to take more profit, let the market play. Let the market go in your direction. Sometimes when you see pullback, you might take your position out, you might close your profit, but you have to be patient. Let's see what the market will do next. You see all this? The market went all the way down. Let me draw this again. Our trend line, our confluence area, our entry, then the market went down. This is all profit. This is how you make money. Okay traders, this is only part 1. I know this video is long, very long. On the next video I'll try to make it short. This is episode 1. On episode 2 I'll try to tell you all the details and the sniper entries, how to use different time frames like 1 hour on different instruments like boom, crush and everything, even for volatility. So take a moment to smash the like button if you like this video, and comment on the comment section. Let me know what you're thinking, what your thoughts are, and if you have questions, put them there. See you. Adios.